One of the daily themes we've been talking about is that record move in the price of gold with everything happening in the world, stimulus spending, economies full of uncertainty right now. And that has obviously helped a lot of the gold stocks, including Agnico Eagle. Not to say that operating as any company, including as a gold miner during this environment of COVID-19, is an easy one. Let's get some perspective more on what happened in the latest quarter. Sean Boyd, the CEO of Agnico Eagle, joining us. Sean, always nice to have you with us. Let's start with the operating environment and what you just went through in that 3-month stretch. How would you describe what that was like?
Well, it was challenging. It was challenging because it was complex from the perspective of conditions were changing very quickly in terms of the government's response to the pandemic in areas where we were mining. And as a result of that, we were faced with 7 of our 8 mines having to either suspend totally their operations or reduce the activities to minimum activities. So that was challenging during the quarter, but I think what we learned is that we were able to adapt quickly. Our team did an exceptional job laying out a plan to protect our employees and the communities, and part of that plan included adopting testing of our employees very early on. We were testing employees in the first part of April, which allowed us to provide that extra layer of comfort to the employees that were still working and to those communities. So an effective plan. We got those operations restarted earlier than we had expected, and that allowed us to ramp them up nicely into the end of the quarter, and we've had a strong July. So from that perspective, the team did a really good job managing it, but it was extremely challenging, no doubt about it.
You know, when you talk about that April period when certainly a lot of people weren't going to work, can you just clarify for our audience, because we've heard over these last few months essential industries or essential workers, like who qualified and who didn't qualify for that. Can you just clarify how your business fit into that?
Well, in Quebec, the Quebec government determined that mining was not essential, so that impacted our 3 Quebec-based operations, but we also operate our Nunavut base connected to the Quebec base in terms of bringing up technical and highly skilled workers into that region. So that also spilled over into Nunavut. And then Mexico as well made a decision essentially to shut down most industries for 2 months, and mining was deemed non-essential. But I think what was important there is we continue to dialogue with both governments to explain that mining lends itself to natural physical distancing, and we had strong protocols in place for hygiene and screening. We were employing testing. So as a result of that, both of those, Quebec and Mexico, allowed mining to start earlier than the original plan, and that's what we referred to. So that was important, and we think that's important going forward because nobody really knows how the virus will play out. Will there be a second wave? But I think what the mining industry has been able to demonstrate is that we can operate safely, and we can operate through what could be a second wave, and we can provide significant economic benefits given the high-paying jobs and the fact that the business is extremely profitable at the present time.
Let's dig into that part of it. And you mentioned ramping up production. I mean, profitability helped by this surge in the price of gold. And as we teased your segment, we were alluding to the fact that you told our colleagues at Bloomberg that you think that this gold rally is sustainable. Not just that, that we could see a further push towards, call it $2,500 an ounce. Can you, as a longtime industry player, can you explain to us the thesis behind continued gains for gold?
Well, this has been building for a while, so it may have surprised a lot of people, but it certainly hasn't surprised us. We've been saying for a while what we were seeing 2 to 3 years ago. We were seeing a renewed interest among big generalist investors, at least to reintroduce themselves to the space and trying to understand what was happening in the gold market, what was happening in the gold mining market. So the gold price was set to do well prior to the pandemic, because what we were having prior to the pandemic is we were having rising debt levels. We were having economies that simply were not growing that dramatically. Debt was rising faster than economic growth. As a result, interest rates were low and were likely to stay low. And since the pandemic, we all know what's happened. We've had massive amounts of monetary and fiscal stimulus, which has dramatically increased debt levels. Economies are contracting. Interest rates are likely to stay low. So we think we're still in the early stages of this. We had been saying for a couple of years that in this cycle, gold would hit a new high in US dollars because it was hitting a new high in every other major currency. It's done that now. It's done it earlier than we had expected, and largely because of what's happened around the pandemic. But I think investors are paying attention now, and investors really drive the gold price higher. We've had really solid... Yep, go ahead.
Oh, sorry about that, Sean. I just wanted to clarify. So that potential for moving higher, like let's say $2,500 an ounce, your time frame for that is what, within the next 2 years?
Within the next 2 years, because I think what we really had is we still really have good, solid supply-demand fundamentals. We still have central banks wanting to own more of it to diversify their reserves away from the US dollar. Mine supply, we know how tough this business is not going to have the ability to respond quickly to higher gold prices. So I think that's set. What really drives it higher, as we were saying, is the investor. And the investor's looking at the prospect of much higher debt, strained economic growth, lower interest rates for longer. The Fed, as we say, going to do whatever it takes to ensure that the economy keeps moving. And that generally at some point drives inflation. And it's not that we need inflation to drive the gold price higher. It's the perception of the expectation that we could get inflation that attracts investors to things like gold. So there's still room to go in our view. And we would not be surprised to see it at 2,500 in the next 2 years.
In the next 2 years. Okay. And then just finally, in our last minute here, we obviously saw a lot of consolidation in the sector before we got into this year and started talking about the rally in the price of gold. For your business, do you see yourself doing any deals in these next few months, given what's happened with the price of gold? Does that change the conversations around M&A, and are you thinking about doing any deals?
It doesn't really change the conversation. We've still got the ability to grow. For us, it's really about how do we stay a high quality business in what is still a challenging business. But I think we're going to see some of the highest historical returns in the sector over the next little while, the strongest relative returns. But if you look at history, and if you look at history in the commodity space, anytime you have a significant move in the underlying commodity, history shows you have consolidation. So I would say that 2 years from now, the industry in terms of the players will look a lot different than it does today.
All right. Well, it should be a very interesting couple of years, to say the least. Sean, thanks a lot. Always appreciate it.
Yeah, good to be here.
As Sean Boyd, CEO of Agnico Eagle, will be watching that stock in trading today.